And now for buy and hold. Buy and hold, we are switching our strategy up a little bit. Where before the last couple of years, we were really pushing rents because we just could. It got to a point where we weren't even running comps for the rents because the comps weren't
Didn't matter.
accurate. Like it was something that you look at the comps, and the comps, if you're watching for the first time, are comparables. You know, what are houses that are comparable to this one renting or selling for? So the comps we were running for rentals, like we would see 1,600, but we would put the house on the market for 18,
Well,
1850.
that's just the issue. Like, you can't run comps. There is no place you can run solid rental comps anymore.
Mhm.
Because the process to list something on the MLS is so terrible, and it costs money, takes time. It's worthless. We list everything through Zillow, and all the more non-property manager style people that own property all list through Zillow. And Zillow does not tell you what something rented for.
Yeah.
So you're never gonna know. So it's very, you just almost have to be in the market and talk to people like, what are you getting? What's happening? But to your point, I think I know where you're going with the rents now. We're switching
Mhm.
strategies on that. But I'll let you go with that. But it's very hard to run comps now. So if you
Yeah,
want to keep
well,
going.
and so what we're trying to do now, just because of the uncertainty in the market, the uncertainty with employment, with what's going on with inflation and everything, is we're no longer pushing rents. Like if we feel that the market rent is probably, let's say 1,700, we're not going to go higher than that. We'll probably go a little bit lower than that.
Yeah, we will.
Because what we want to do is find a tenant that's going to be reliable, that no matter what happens, we know they're going to be in that house come 6 months from now, come a year from now. So we're looking at their jobs, at their income, because we started seeing that a lot, even in apartments, that people are getting almost co-signers because they weren't making the 3 times rent. So they're like, all right, you're making 2.5 times rent, but if you have a co-signer, then you can get this apartment. And I'm like, holy shit. Like, this is crazy. You're pretty much saying, like, because they say 3 times rent is what they're looking for, because in theory, with 3 times rent, you should be able to afford your rent and
Yeah.
all your other bills. The problem is most Americans have a lot more expenses
Well, that's the problem
than
when
two
people
thirds.
focus only on the money.
Yeah.
And it's like, I need to get my returns. I need to drive rents. Rents can do it. Rents can do it. Rents can do it. The only problem is you're going to realize, like, when you start doing that and cutting your criteria, your evictions are going to go up.
Yeah.
Your delinquencies are going to go up. It's just going to become much harder to rent the house. Your repairs are going to go up because you got less quality tenants. Are going to damage your property more. And it's like, that's the issue you're going to have when you drive. You buy high prices. You want to buy and hold, and you try to push the rents to get even higher. And then the quality person, you're not going to be able to find. So that's what we're doing. It's like, we're dropping prices where it might rent for $1,700. We're going to go for $1,600 because, one, we bought it at a time where our mortgage is low enough to where we have that margin to drop, and we understand that I get a better tenant in there. I will pre-screen that tenant a lot more.
Yeah.
To know, like, do you have the cash to float? You're not one car payment away or one breakdown away, flat tire car repair from missing rent.
Yeah.
Yeah, we've done that twice this last year where it's just like, dude, I don't care anymore. Like, I want my rental portfolio to be as hands off as possible. And that comes from the tenant, not just from the house, because we've already put a good quality product out there. Now I want a quality tenant. Well, I will gladly take $1,200 less over the course of 12 months to get a better tenant.
So we have a little bit. So let me put the final point, and then I want to hit a question that I heard recently. So the final point on this is, you made an excellent point there, where it's like, you should not get into an investment, and the only way it's going to make sense if the market pulls you out, right? That's like, I need to get this price in order for this house to make sense. I need to get a higher rent in order for this rental to make sense. If it doesn't, you make that deal make sense when you buy. If it doesn't make sense when you buy and you're hoping it's going to make sense when you sell, my goodness, are you gambling? Like, you are really hoping for the best there.
McElroy talking about this the other day. He's like, I see so many syndicators out there
Oh, yeah.
only syndicating to get the fees.
Yeah.
It's like, when you look at their numbers,
They have no
like with
experience.
the interest, no, not experience. It's just like with the interest rates and the cap rates and everything. He's like, the deal that their carrying costs won't even let them hit their cap rates. Like, they're doing it for the fees because they get massive acquisition fees, and it's an easy industry to sell and raise money right now.
Yeah.
So it's like, you look at syndicators, you have to watch that. Is like, are they raising money just to get the fees? Like, because they can make anything look pretty on a spreadsheet. That's easy to do.
Yeah.
But when you look and understand the things that we just mentioned about higher costs, higher rents, higher turnovers, like those things are very expensive. And then you have vacancies on top of that. Like,
So
I'm sorry, and it's also, you can't really go after a tenant. You can put a judgment against them and stuff like that. Yeah, but good luck from somebody that's
collecting.
renting something like that, being able to collect, because they're never going to own an asset you're going to be able to collect
It's
from.
the same when I hear investors say, if this contractor screws me, I'm going to sue them. I'm like, okay, yeah, good luck with that, buddy. Let's see what you're going to get from that contractor. But you brought up Ken McElroy. He has an excellent podcast I recommend everybody check out. Not instead of ours. That's on top of ours. You should check that one out. And but he was talking about what he's seeing, because they do apartment buildings and all that. He holds, like, I don't know, over 10,000 doors, whatever he holds. And one of the trends that he's seeing is that on his 3-2s, 4-2s, all of these, he's getting application for essentially couples that are moving in together, like sets of couples, right? So you're having a guy and his girl and another guy and his girl, or girl, guy, whatever gender.
Stop talking.
Okay,
your story.
So let me move on.
You don't get out.
Brian, start offending. YouTube's gonna shut us
down.
Stop
talking.
Okay,
Go.
Okay.
God.
So they have different, but what I'm trying to get to is that they're not all family, right? They're friends, whatever it is. They're all moving together and pretty much essentially trying to rent out by the room, because that's the only way they're going to be able to afford these rents, these places, these houses. So they are looking for bigger properties, bigger homes that they can move in with multiple people to make it more affordable. So that was very interesting. So as an owner of rental properties, would you allow that on your properties?
100%.
Yep.
It's one of the things, like, I mean, it's hard to do. It's like, what is the status of their relationship? It's like, oh, I don't want them to break up and they move, because some people
you gotta check on Facebook.
Yeah. But I would 100%, because like we've trying to think if we've had somebody like that. I know we've had two friends move in together and both had separate jobs, and
we had that family with the mom, and she was supposed to be getting a job.
Yeah, but I mean, we have had that where it's like multiple people move in with multiple income streams, and like I would definitely do that. It's like, hey, you have two couples moving in, you have 4 incomes there.
Yeah.
It's like, yeah, you can well afford my house to where something goes wrong. You guys are on the leases, and nobody wants the eviction on there, because like that's the biggest thing you can hold over somebody's head is an eviction. Because once that hits their record, now anything they go try to rent, they're going to see an eviction.
Yep.
And that's going to be hard to rent something. It's not the money that you're going to recruit, but that eviction is what you can hold over somebody. So all 4 of them do not want an eviction now. If something doesn't work, it's like, hey, you're all on this. You guys need to figure this out. So I would definitely rent to more than one family.
And this goes back to a point, again, if I haven't said it enough, education. Like, listening to these other podcasts, listening to what other people are doing, it's going to give you ideas and things of what other people that maybe have more volume than what you're doing are doing to adjust for these things, and give you ideas on how to manage it, how to run it, how to make it work to your benefit. There's always a way, always a way to make money in any market, but it requires financial education. It requires knowledge to do it. So invest in that, spend time learning, reach out to people in your area that are doing it right, and build those connections, build those networks.